Good morning, everyone. I'm Vince Lancy. This is the Gold Fix Market Rundown. It's 7/14. It's unemployment day. I don't know what that is. That's just a page. There's the home page. Here's the markets. 10-year yields are unchanged offer. The dollar is down 21. S&P 500 is up half a handle. The NASDAQ is down 2. The VIX is up 19. Gold is up $81. So yesterday's retracement undone and then some. Silver, $86.03, up 5 cents after yesterday's serious but not horrible sell-off. Gold silver ratio is down 3. Shanghai silver is tightening as we rally, which you want to see. You expect to see that. Tighten in a rally, wind in a sell-off. That's normal behavior. That's good. WTI is up a buck 17. Rotation into crude continues. Natural gas on its heels down 4 cents. Platinum up $90. Palladium up $57. Ooh. Bitcoin down 2.5%, and grains are mixed. There's the home page. We're going to talk about the story in the lower right-hand quadrant. And there it is. China's silver market is flashing stress again, with exchange inventories collapsing to decade lows, even as global prices appear calm. Now, silver prices have stabilized internationally. We'll show you that in a second. Yet physical conditions inside China remain tight. Shanghai exchange inventories have dropped to decade lows. Front-month contracts trade at record premiums, and backwardation signals urgent demand for prompt delivery. Investment buying and solar manufacturing are draining stockpiles, while broad geopolitical supply shifts are amplifying the strain. Now, as Eric Young and I discussed 2 weeks ago, just 2 weeks ago on a podcast here, this situation was building. And now, as of yesterday, China has announced new measures aimed at clamping down on speculation and coordinated short pressure in the silver market. Hat tip to Bai Zhaojun as well. This serves two purposes, as discussed with Eric just now. First, it signals that the SHFE intends to actively police member behavior and restore market credibility on the global stage. Second, and more to Eric's point, it creates a transparent test. If prices move materially from here, we will have clear evidence as to whether direction reflects genuine supply and demand or administrative influence. Essentially, there is a silver squeeze. Bloomberg reported it first, and we're following up on it with a lot more analysis. Now, we'll get into the charts, the backwardation, when we get into the chart section. There's the news and analysis. Marco Rubio, people really like that. How Tether Gold fits Zoltan Pozar's 23 framework. I personally really like that because I think there's going to be an announcement coming up soon to the effect that more and more states are going to be befriending gold and silver. More and more states will be talking to Tether and companies like Tether. More and more states will be gearing gold and silver ownership towards the IRAs and 401ks that they were just enabled for. In case you missed it, China says to dump U.S. bonds. Nothing new there, but maybe it's material. And the relaunch, I will do that today, I promise. I want to throw this in there before I move to the charts. Today is unemployment, as you can see right there. We haven't done the actual math on the number that's expected, but I think more important than math that's expected is something that Zero Hedge pointed out just now. Zero Hedge argues that the Bureau of Labor Statistics will implement major benchmark and methodological revisions to the jobs report, correcting distortions from the birth-death model that overstated employment. We wrote about that about 6 months ago, right after they did. The concept basically is the numerator and denominator are wrong, and as a result of that, the jobs have been overstated during the Biden administration and somewhat in the Trump administration. Now that revision is going to probably sink jobs. Payroll growth between April 24 and March 25 is expected to revise down by roughly 750,000 to 900,000 jobs, with additional downward adjustments potentially bringing total revisions near 1 million. Updated seasonal factors and population controls may further weaken reported labor momentum and increase month-to-month volatility. There's a link to the story that Zero Hedge has behind their premium paywall. We understand this enough to say that the numerator and denominator were messed up so that people looking for jobs were counted, and people not looking for jobs were also counted. And the birth-death relationship, basically, there was a staggered accounting. So, when you're dead, something had to do with being dead and not being. I wrote it all up, and I forget it now. It was like 6 months ago, but it was a big deal the last time they made a revision, and it's probably going to be a big deal again. And that could play havoc with the data today, with the markets itself. Please support independent media, MAGA and MALGA hat. Let's go to the charts. I'll show you what I'm talking about. All right, so this chart, this is Bloomberg put a chart out. Ours is better. The March-May spread in Shanghai. March futures versus May futures should be like this. March slightly under. And as you can see, well, maybe you can't see it, but I'll explain it to you. This represents March in red as very over May. Should not be over May. Should certainly not be over May this much. It's over May by 840 yuan or renminbi. Okay, that's a sign that people want their silver now, not next month, now. That's a sign of physical tightness, and it also reflects on another chart we showed you. Now, to give you an idea of the scale of how big this is, see that blue line? That blue line is not a random straight line. That blue line is the COMEX March, May, which is where it should be. March, May on the COMEX is all the way down here, actually negative. March, May on the Shanghai is up here, positive by a shit ton. Okay, so the problem that we had, we don't have anymore. JP Morgan's pulling in concentrate. Our metal is going to be hitting the market soon. They have refining. They don't have metal. We have metal. We don't have refining, but we're getting refining. So the whole thing is kind of shifting. Again, as Eric and I had said before, when we went into Venezuela and threw Maduro out, that was on top of the other changes coming with the Monroe Doctrine, meaning, I'll never forget when Eric said this. He said, oh, Venezuela supplies a decent amount of oil to China. This is a play against China. And I was like, oh, well, then that's what the silver thing's about. China has been pulling offtake concentrate of silver for the last 5 to 10 years out of Latin America. They've been strengthening their ties with Latin America, securing votes for Taiwan independence, making sure it doesn't happen. And we went down there and said, Maduro's out. We want China out. We want everyone out except America there. Don't tread on us. The Monroe Doctrine. Well, it affects oil more than anything else, but silver, there's not a lot of places you can get silver. And to cut off the supply of silver from Latin America is a pretty big deal if your industry demands it. So it's a big deal. I mean, look at the spread there. That blue line is the normal spread. That's the scale of what it's supposed to look like. Let's see if I can stretch this. Give you an idea. See that? Maybe you can't see it. It's -1. It's supposed to be -1. These spreads are March and May, their March and May versus our March and May. This is completely apples to apples. And yet, China is freaking out. Okay. Market itself. I'm going to change that back to a candle. Pardon me while I clean this up. Bring this back up. All right, let's pull up silver. All right. We start with silver. Remember, I was worried, down, up, down, up. It still could be a bear flag that's, again, forming, but it's a lot less likely for that. We'll come back to that. Gold, I think, should have completely, gold obliterates the bear flag. Okay? So this is what I was worried about. Gold down, up, down. This, provided it closes green, obliterates the bear flag. Okay? We're now up here, and I did say yesterday above here, et cetera, et cetera. Subscribers may be interested to know that ratio condor I have, that's an expression of bullish to neutral. I took a leg and I added to it. So now it's neutral to bullish as opposed to bullish. I'm sorry. It was neutral to bullish. Now it's bullish to neutral. So hopefully we're all doing well today, and let's see what happens. But this should skate. Now, the only reason it's not skating now, now I think about this, is unemployment. So if unemployment comes in really strong and the revisions don't matter, the metal should just sell off. If the unemployment comes in weak and or the revisions are big, which I suspect they will be, then metal should dip and rally. We'll see. Stay tuned. I'm Vince. Have a great day.